Hello there, this is fairbinaryoptions.com and we are looking at the euro and Australian dollar on this Saturday, 16th of November 2013, as you can see here. Now, during the weekend we are making our plan for trading for next week. Well, euro dollar should be part of that plan. Why is that? Because even though this picture here for, let's say, the majority of the traders looks to be corrective and price should break to the upside, I would say that it will break to the upside, but not yet. This is a daily chart, this is a bigger time frame, and here we are, we'll try to make the case for why the move to the upside is completed, and normally price should turn and break these lows. So looking for a move in the end below the 140 area, and the reason for that is the structure from the highs. If you go and take a look at the highs from the 130, from the 150 area to the downside, there is a clear impulsive move until these lows here. So the move that started from the highs there into these lows here, it's an impulsive move. So let me mark the lows there. So five-way structure. Well, if this is a five-way structure, then we are looking at a three-waves correction to the upside, and this three-waves correction should be either a zigzag or a flat, but should not retrace more than 38.2 out of this more than 61.8, sorry, out of this leg. So if you take a Fibonacci retracement from the highs and to the lows here, we'll have 61.8, not barely touch, but the move here, so I would say that this is a wave A of a bigger degree. Let's try to put some to have some count there. So this to be a wave A of a bigger degree, and then a B wave to the upside. But this B wave to the upside, you should be aware that it is coming in the form of a flat. This seems to be a regular flat, and the regular flat out of this degree, the B wave, should be done with these recent highs. Now, which are the recent highs and what is the exact level there? It remains to be seen if we're going on a lower time frame. Let me delete the fib from there, and of a lower degree, this should be labeled like wave A to the upside. Then a B wave to the downside, that it is a clear corrective move because it is channeling too well. As you can see, everything seems to be in place. So A, B. So wave A to the upside, then A, B, C like this. B to end around these levels, and of course the C wave to the downside. So A wave blue here, then A, B, C to the upside for the B wave. Everything respected there. The B wave is the more complex between the waves. The C wave to the upside should be an impulsive move. It is a terminal impulsive move, and from that moment on, we are looking at price to move to the downside from these highs. Now, what is the move that comes after these highs? So from these highs, what is the move that comes after the highs? Well, the move to the downside, believe it or not, but if you go on the lower time frames, it is not impulsive. So it is coming in the form of another ABC. If you go on the 4-hour chart and try to study the move from here, and the move from here, as you can see, there is no extended wave here to the downside. So based on that, we are saying that actually this is a three-ways move that comes in the form of most likely a double zigzag. It should end around this current level here, and this to be only the first wave of a lower degree wave. So the first wave. Then a second wave should be to the upside with the A, B, and C to the upside, and this second wave with the A, B, C should come in the form of a complex corrective wave. It seems to be a flat here, but this flat to be done with a contracting triangle out of this degree. This to be the contracting triangle for the B wave. It is not, let's say, a common contracting triangle, as it is difficult to visualize such a pattern, but it is a contracting triangle, and this should be labeled A, something like this, A, then B, and the C wave to the upside. Well, this C wave to the upside seems to be an impulsive move, 1, 2, 3, 4, 5, and the whole structure and the whole pattern, let's say, or the impulsive move to be done here for the second wave. So what to look for now to the downside is a 3 waves move that should go something like this. In the form of an ABC, and should definitely take the lows or the previous lows in the 140 area, or at least for the first wave, there. So these lows normally should be broken. That being the case, we are looking to buy puts, and as the expiration date, we will choose end of week expiration date, as things need to develop a bit in order for prices to reach to that level. So look for an aggressive move to the downside. In terms of fundamentals, we're going to have next week the ZOO in Germany. We're going to have the FOMC minutes in the United States, but also we're going to have the minutes in Australia. So I would say that a bearish ZOO and let's say not so dovish in Australia would help the euro Australian dollar to move to the downside. So as a consequence, we're looking to, straight from the opening on Monday, buying puts with end of week expiration date. This is the plan for next week on the euro and Australian dollar pair. It remains to be seen how the markets are going to treat this scenario. From our point of view, the downside is to come. Thank you very much for being here. This is fairbinaryoptions.com, and all these recommendations and analyses are possible due to the help of our official sponsor, Lionknife. So make sure you check lionknife.com.